Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video.
Hi everyone, this is the 8th video of Consignment Accounts, and in this video we are going to solve this problem which has abnormal loss in it as well as normal loss. Okay, now I will show you how to solve a consignment problem when abnormal loss as well as normal loss is given together. Now first let's see the question and let's analyze it. Now here it is said, Danish Limited of Bangalore consigned 10,000 kg of oil costing rupees 60 per kg to Rohan of Mumbai. So here this company Danish Limited has sent goods to Rohan of Mumbai. It has sent consignment of 10,000 kg of oil costing rupees 60 per kg. So now here Danish Limited is the sender. So Danish Limited is consigner because he has sent the goods. And then this Rohan has received the consignment. So Rohan is the consignee. Danish Limited is the consigner and Rohan is the consignee, the sender and the receiver. Right, and the consignment is of 10,000 kg of oil which has been sent to Rohan. And then they have said Danish Limited paid rupees 80,000 for freight. So this Danish Limited has incurred an expense of freight of 80,000 to send these goods to Rohan. Alright, so this is an expense incurred by the Danish Limited, the consigner. Fine, and then they have said 200 kg of oil were destroyed in transit. So destroyed in transit, that means this is what? This is abnormal loss. This is what? This is abnormal loss of 200 kg. 200 kg were destroyed in transit. So this is what? This is abnormal loss. And then they have said the insurance claim was settled at rupees 12,000 and paid to consigner. So then the claim was received from the insurance company of rupees 12,000. We'll see that how to treat it. All right. Okay. Then they have said Rohan of Mumbai took delivery of the consignment. That means Rohan took the delivery of the consignment. He received the consignment from Danish Limited. And then they have said and accepted a bill drawn on him by Danish Limited of 4 lakh. So Danish Limited, the consigner, drew bill on Rohan Limited. Okay, this is Rohan. And he accepted the bill of 4 lakh. Okay, he accepted the bill of 4 lakh. Then it is said an account sales was received from the Rohan. So the consigner received what? The consigner received account sales from Rohan. What is account sales? Account sales means a report that is prepared by the consignee and it contains the information related to the consignment. How much goods were sold, how much commission was charged, and what the expenses were incurred by the consignee. All these informations are contained in the account sales. So here also an account sales was received by this Danish Limited, from the Rohan, right? And it contained the following information. See here, 8,000 kg were sold at rupees 90 per kg. So here it is said this Rohan sold 8,000 kg of oil at the rate of 90 rupees per kg. Fine, sales is given, and then unloading charges, go down rent, and then advertisement. So these all are the expenses incurred by the consignee, okay, unloading charges, go down rent, advertisement, and the amounts are also given. So these are the 3 expenses incurred by the consignee. And then they have given us 200 kg were lost due to leakage, which is considered to be normal. You see this? What is this? This is normal loss. This is what? This is normal loss of 200 kg. Now we will see how to treat this normal loss also while solving the problem. So this is normal loss. Okay, before there was given a loss and they didn't say anything. They just said 200 kg of oil were destroyed in transit. So that was abnormal loss. But here this is specifically given, considered to be normal. So this is normal loss, and the losses due to leakage, evaporation are called as normal loss. Okay, all right. And then they have said Rohan is entitled to a commission at 5% on sales. So this Rohan is entitled to a commission of 5% on sales. How much he has sold, on that he will get a commission of 5%. And then it is said Rohan paid the due in respect of the consignment. So he has paid whatever that is due to the consigner. After selling the goods, after incurring the expenses, and after getting his commission and everything, he has paid the money back to the Danish Limited, whatever money he received by the sales, right? So this is what is said here. And then they have said prepare the necessary ledger accounts in the books of Danish Limited. So now let's solve this question and see how to prepare the consignment account, consignee account, and how to treat this abnormal and normal losses, and how to calculate and do the valuation of the closing stock. Okay, now let's solve this question. Now let's solve this problem. First, we have to prepare the consignment account to find out the profit or loss made by the consignment. And you know, right, how to prepare the consignment account? It's very simple. You have to record all the expenses on the debit side and all the revenues on the credit side. And this problem is based on cost price, okay? It is not based on invoice price. Why? Because in the question there is no mention of loading, there is no mention of invoice price, nothing. Yeah, so here we will consider this as cost price problem. Simple. Okay, let's start. At first, what happened? At first, this company Danish Limited, it sent 10,000 kg of oil at the price of 60 rupees to Rohan, the consignee. Yes, now what is this? This is an expense for the consignor. Why? Because this Danish Limited had to purchase these 10,000 kg of oil and then send it to Rohan. So it is an expense for the consignor, right? Simple. Okay, so where do you record the expense? Here on the debit side, 2 goods sent to consignment. The goods are being sent to consignment and it is of 6 lakh. The cost of the goods is 6 lakh. 10,000 kg into 60 rupees, that is 6 lakh. Simple. Okay, and then what happened? And then this Danish Limited also incurred an expense of 80,000 on freight charges. Now what is this expense? This is a non-recurring expense. Okay, keep that in mind. We have to use that while doing the valuation of closing stock as well as while doing the valuation of abnormal loss. So here we have to record all the expenses. In the consignment account, we record all the expenses, okay? Recurring, non-recurring, both we recorded in the consignment account. So here this will be recorded on the debit side. This is an expense. Expense is increasing, so you have to record it on the debit side as to cash account, and in bracket you have to write freight charges or freight expenses, anything, okay? It's better to write because it becomes very clear for the examiner to identify, right? It's better to write. So freight charges, so 80,000. Simple. Okay, and then what happened? And then Rohan received the goods. He received the consignment and he sold 8,000 kg of oil at the price of 90 rupees per kg. So now what is sales? Sales is what? Sales is revenue. The money comes into the business. So it is a revenue and all the revenues are recorded on the credit side as by Rohan because Rohan is the person who sold these 8,000 kg of oil. Yeah, so by Rohan, and in bracket we will have to write sales and it is 7,20,000. The total value 7,20,000. 8,000 into 90, 8,000 into 90, see, 8,000 into 9, that is equal to 72, right? So 7,20,000. Okay, so 7,20,000. And then what happened? And then this Rohan also incurred some expenses. See, unloading charges 16,400, go down rent 3,000, advertisement 20,000. Now here you can see in these 3 expenses, 2 are recurring and the first one is non-recurring because unloading charges are paid only once and they are incurred in transit before the goods are reached to the go down. Yes, unloading charges, it is paid to unload the truck, yes, before the go down. So it is a non-recurring expense. But I told you, right, all expenses are taken into the consignment account, but only non-recurring expenses are considered in the valuation of abnormal and closing stock. So here we have to take the expenses on the debit side as usual, so to Rohan because Rohan is the person who incurred these expenses. Yeah, so unloading charges, go down rent, advertisement, all the amounts you have to take 16,400, 3,000, 20,000, then you have to add them and take the amount outside, so 39,400. Simple. Okay, and then what happened? And then commission happened. See, this Rohan was given a commission of 5% on sales. How much was sales here? 7,20,000. He sold 7,20,000 worth of goods. So 7,20,000 into 5%, that is equal to 36,000. Simple, 36,000. So his commission would be 36,000, and it's better to write, okay, commission in the bracket and 5% on sales. It's better to show the calculation also, okay? So 36,000. And then what happened? And then if you can see, abnormal loss happened. So you have to know how to do the valuation of abnormal loss. Now let's see how to do the valuation of abnormal loss. Now, as given in the question, that 200 kg of oil were destroyed in transit. So that was abnormal loss, and now you have to find out the value of this abnormal loss. So let's see how to do that. It's very simple. The first thing that you need to do is you have to take the cost price of the goods damaged or destroyed. Okay, here in this question it is given that 200 kg was destroyed, so 200 kg that you have to take, and then the cost price, so into the cost price, that is 60 rupees. Simple, 60 rupees per kg, so 200 into 60, that is equal to 12,000. It is, see, 200 into 60, it is equal to 12,000. So 12,000, and then you have to add the non-recurring expense, but here we will add the non-recurring expense only by the consignor. Now here the consignee has also incurred the non-recurring expense, but we will not consider this in the valuation of abnormal loss. Why? Because see, first the consignor incurred this whole expense on this consignment of 10,000 kg, and then it was sent, and then in transit, keep that in mind, in transit 200 kg was lost, and then Rohan received only 9,800 kg of load, right? Only 9,800 kg, and then he incurred an expense on this unloading charges on this only 9,800. So on this 200 kg there was no unloading charges expense incurred, right? So you have to ignore unloading charges in the valuation of abnormal loss, because this abnormal loss happened in transit. If it happened here after the goods have been reached to Rohan, then you need to take it, but now here you don't have to take it. Clear, right? Okay, so you have to take only the proportionate non-recurring expense by consignor. And how to calculate that? See, it's very simple. How much he incurred? He incurred 80,000 worth of freight charges, right? So take that 80,000 total expense, yes, 80,000, and then he incurred it on the whole consignment of 10,000 kg. So the total is 10,000. The total is 10,000, so it will come down the total. And then what we have to find? We have to find of only 200 kg. So 80,000. So 80,000 into 200, yeah, divided by 10,000, that is equal to 1,600. So the proportionate non-recurring expense by consignor is 1,600. Simple. So then you have to add the proportionate non-recurring expense, then you will get the value of abnormal loss as 13,600. Simple, right? The cost price of damaged good and then add the proportionate non-recurring expense. But here we will ignore the non-recurring expense by Rohan, because this expense was not incurred on these 200 kg. So we will ignore that. We will only take the consignor expenses, and we have got 13,600, and that will go to the credit side as by abnormal loss 13,600. Simple. Okay, now let's see how to do the valuation of consignment stock, because we have to find out at last how much closing stock was remained and the value of that stock. Okay, first we have to calculate the quantity and then the valuation. So let's see that. Now everything is over, right? We have seen two goods sent to consignment, the expenses of consignor and consignee, and then the commission, the sales, and also the valuation of abnormal loss. Almost everything is over. So now we are at the end of the consignment. So now we have to calculate the closing stock, the valuation of closing stock. But first we have to calculate the quantity of closing stock. We have to prepare this working note for the calculation of closing stock quantity. That is how much oil is left with the consignee at the last of the consignment. So now to do that, it's very simple. See, first you have to take the goods sent to consignment. That is how much goods were sent to the consignee. Yes, 10,000 kg. But 10,000 kg were sent, but abnormal loss happened in transit, right? So 200 kg of oil was destroyed. Yes, the quantity was reduced, and the normal loss also happened as said in the question. See that normal loss 200 kg. So due to normal loss also again the quantity reduced by 200 kg. So subtract that, and then sales happened. The Rohan, the consignee, sold 8,000 kg of oil. So you have to subtract that, and then after subtracting all these three, you will get 1,600 kg of oil which is left with the consignee. See, it's very simple. 10,000 minus 200 minus 200 minus 8,000, that is equal to 1,600. So 1,600 kg of oil is left with the consignee. Quantity of closing stock. This is quantity, okay? This is not the value. This is the quantity in kgs. Now we have to find it in rupees, the value of this 1,600 kg. But here in this question, since there is normal loss, yes, there is normal loss as well as abnormal loss together, so the valuation of closing stock is slightly different, okay? But it's very simple. I will show you. Now after the calculation of quantity of closing stock, now we have to do the valuation of closing stock, and it's very simple to do the valuation of closing stock. See, the first thing that you have to do is you have to go sequentially, okay? You have to go in sequence, and here there is normal loss as well as abnormal loss, so the method is slightly different than the previous method, okay? So let's see. So here first thing you have to do is you have to prepare this working note and take quantity column and an amount column. Simple. Okay, so first thing you have to take is the goods sent to consignment. How much goods were sent? 10,000 kg of goods were sent. Yeah, put that in quantity column, and then the value, the total value, 6 lakh, right? 10,000 into 60 rupees, isn't it? At 60 rupees it was sent, so 60 rupees, so that is 6 lakh. And then what happened? And then non-recurring expense happened. This consignor incurred an expense of 80,000 on freight charges. Yes, this is a non-recurring expense, so you have to take that, okay, plus freight, entire amount, okay, entire amount, not proportionately, entire amount you have to take here, okay, because the method is slightly different here. So you have to take entire amount, 80,000, and it will not increase the quantity, it will not increase the quantity, it will just increase the cost. 6 lakh plus 80,000, that is equal to 6 lakh 80,000, and 10,000 is the same quantity. And then you have to go in sequence, see, and then very next what happened? Abnormal loss happened. 200 kg were destroyed, 200 kg of oil were destroyed, so take that. But abnormal loss will be subtracted, because abnormal loss reduces the quantity as well as the value of the cost, isn't it? So you have to subtract it, okay. 200 kg were destroyed, and the value of 200 kg was 13,600, right? We calculated that, right? The valuation of abnormal loss. So take that 13,600, subtract that, then you will get 9,800. And here let's see, 6 lakh 80, see, 6 lakh 80 minus 13,600, yeah, 13,600, sorry, 13,600. So you get 6,66,400, 6,66,400. Simple. Okay, and then very next what happened? And then Rohan received the consignment, and he immediately incurred again non-recurring expense. He incurred what? Non-recurring expense, that is unloading charges of 16,400. So here also you have to consider this unloading charges, okay. But in abnormal loss valuation we didn't consider this, yeah, but here you have to consider this, okay. So unloading charges 16,400, non-recurring expense, and due to this expense the cost will increase, so you have to add it, okay. So plus unloading charges, but you have to add it after the abnormal loss, okay. You have to go in sequence. If you miss the sequence, then this entire thing will be wrong. It's very simple, just go in sequence, that's it, okay. So unloading charges, non-recurring expense 16,400, you have to add. Again, this will not increase the quantity, it will not reduce the quantity also, so the quantity will remain the same, but the value will increase. 6,66,400 plus 16,400, see, 6,66,400 plus 16,400, yeah. So that is equal to 6,82,800, 6,82,800, and then 9,800 is the quantity, the constant, okay, the quantity is constant. And then what happened? The main thing, see here, normal loss happened. Normal loss of 200 kg happened, right? Now I want to tell you one important thing about normal loss. See, normal loss is not considered to be a real loss. It is not considered to be a real loss, so you will just subtract the quantity. You will not do the valuation of normal loss, nothing. See, normal loss will be taken, of course it will reduce the quantity, so you have to reduce that. From 9,800 it will become 9,600. The 200 has been lost, but due to leakage, okay, but this normal loss is not considered to be real loss, so you will not reduce the cost. You will not reduce the cost, so we will not do the valuation of normal loss, and we will not deduct the value of normal loss, okay. We will not consider normal loss as a real loss, because it is natural, it is natural loss, it happens every time, okay, due to leakage, evaporation, like that, okay. But abnormal loss happens due to some accidents or theft, like that, and it can be avoided, but this normal loss cannot be avoided. If you are bringing, let's say, if you are bringing something, flour or oil, then of course something will evaporate, something will fly away, yeah? So it is unavoidable. So normal loss, only the quantity you will deduct, but you will not deduct, you will not do the valuation, and you will keep it same, okay. So 9,600 and 6,82, it will remain the same, the value will remain the same. Now everything is over, right? See, normal loss finish, abnormal loss finish, and then non-recurring expense is over, the cost is over, everything is over. So we have found the last value, okay. This is the last value before the sales, okay, before the sales. Always remember, these both amounts are before the sales, okay. Now this is 9,600. If you deduct the sales, then you will get the closing stock, okay. Here also the same thing. Now we have to apply the formula. See, 6,82,800, you have to take this, okay. This is the value, okay, the last value you have to take into the closing stock quantity. We have found out the closing stock quantity, right? Closing stock quantity, yes, you have to take that 1,600 closing stock quantity, and then divided by this quantity. that is before sales quantity, okay, 9600. It's very simple, this formula, the last value into closing stock quantity and the quantity before sales, simple. So you have to take that. Now after applying this formula, you will get 1,13,800 as the value of the closing stock. It's very simple, okay. 6,82,800 into 1,600 divided by 9,600. You see, it's very simple, but my calculator is small, so let's see if I can calculate this. Divided by 9,600 into 6,82,800, you get 113799. so you can round it off, okay. You can round it off, so you can make it, okay, you can make it to 1,13,800. you can round it off, okay. So this is the value of the closing stock, simple. And then this value will go to the credit side of the consignment, okay. Buy consignment stock 1,13,800, and then at last you have to balance the consignment account. You know, right, how to balance the consignment account? See, the credit side is bigger, 7,20,000, yeah. So 7,20,000 plus 13,600 plus 1,13,800, yeah. So it is 8,47,400. So write it on both the sides, 8,47,400, and then go on subtracting all these amounts. See, minus 6 lakh, that is the first amount, minus 6 lakh, and then minus 80,000, yeah, and then minus here 39,400. So 39,400, and then here 36,000. So subtract that 36,000, then you get 92,000 as the profit. You see, there is deficiency on the debit side, that means there is profits. This is the balancing figure, okay. So 8,47,400 minus all these amounts, you will get the balancing figure, and this is 92,000 profit. If the balance comes over here, then that means this is profit. If the balance comes over here, that means that is loss, okay. But here there is a profit, okay, simple. All right, now let's prepare the consignee account. It's very simple to prepare consignee and all accounts, okay, but this is the main account that you need to prepare, and the following accounts are very simple to prepare. Now let's prepare the following accounts. Now after preparing the consignment account, now you have to prepare the Rohan account, the consignee account, and this account is very simple and easy to prepare. You just have to do the cross postings, okay. That's all you have to do, just the cross postings. See, it's very simple. Now here you can see, here there's buy Rohan in consignment account on the credit side. Now you have to take that amount 7,20,000 on the debit side of the Rohan account, okay, cross postings, and you have to take as 2 consignment because this is in consignment account. So on the debit side you have to take 2 consignment 7,20,000, simple. And then in the question it is said that Rohan accepted a bill of rupees 4 lakh. Yes, so it is what? It is bills receivable. By bills receivable 4 lakh, because the consignor is going to receive the bill from the Rohan. Yes, he is going to receive the amount from Rohan, so 4 lakh will come on the credit side, okay. By bills receivable 4 lakh, and then as you can see, again the Rohan name has come on the debit side of the consignment account to Rohan, yeah, expenses and commission. So you have to take that on the credit side, the cross posting, opposite entry, right. So here you have to take as buy consignment 39,400, 36,000, simple, okay. And then at last you have to balance the Rohan account. See, this side is bigger, right, debit side is bigger, 7,20,000, so you have to take 7,20,000 on the both the sides, and then go on subtracting 7,20,000 minus 4 lakh. See, it's very simple, 7,20,000 minus 39,400 minus 36,000, then minus 4 lakh, I forgot the 4 lakh, so 4 lakh, then you will get the balancing figure 2,44,600, yeah, the difference amount. So that you have to take as buy cash account, because this is the final remittance that the consignor has to receive from Rohan, okay. So this is buy cash 2,44,600, simple, okay. So this is how you prepare the consignee account. You just have to do the cross posting and that's it, okay, simple. And then at last you have to do the balancing figure, and that you have to take as buy cash, that's it, okay. And then the third account that we need to prepare is the abnormal loss account. And why do we have to prepare this account? That is because we have received an insurance claim of rupees 12,000 on abnormal loss, yeah, the goods damaged. So now we have to prepare this abnormal loss account by just doing the cross posting, okay. This is also very simple. See, here in consignment we have got abnormal loss, right, buy abnormal loss 13,600, so this will go here as 2 consignment, Okay, to consignment 13,600 cross posting. Okay, simple. And then the insurance claim, see how much was the insurance claim? Insurance claim was of rupees 12,000. So you have to take that here by bank account, in bracket it's better, right? Claim. Okay, so 12,000 rupees were received, and then we have to balance this account. See, 13,600 is bigger, right? So 13,600 on both the sides, and then subtract this 12,000 from 13,600, you will get 1,600 as the balancing figure, and you have to take it as by profit and loss, because this is the net loss. We have received the compensation from the insurance company, and then we have lost this much amount of money. Okay, 1,600. So that will go to profit and loss account. Simple. Okay, and then we have to prepare at the last account, that is goods sent to consignment account, and this is also cross posting. Very simple. See, to goods sent to consignment on the debit side, you have to take it on the credit side as by consignment 6 lakh, and then the balancing figure will go to the trading account. Yes, it will go to trading account. Okay, 6 lakh both sides, and then subtract. Here there is nothing, so 6 lakh minus 0, it is 6 lakh. So the balancing figure is 6 lakh, so it will go to trading accounts. See, it's very simple. This also cross posting, and then abnormal loss also cross posting, and this one is also cross posting. It's very simple to prepare. Now, so this is how you solve a problem of consignment when normal loss as well as abnormal loss is given. Okay, so it is very simple. Okay, normal loss and abnormal loss, the treatment was very simple. I hope you have understood it. Okay, thank you.